Well, we were expecting the second rate hike. Now, there are talks of a third and a fourth. Whether that happens, again, from what the Federal Reserve have mentioned, it relatively, again, depends on inflation and how the economy and the U.S. economy performs. For us in Nigeria, I suppose it has some sort of bearing, but not a tremendous amount. If you think about it, the last time the DMO went into the market, we were oversubscribed by 400%. What that means is that there's considerable appetite for Nigerian debt. We have seen, you know, the oil price. I mean, it's staying above $70, and federal portfolio and federal, foreign direct investment and foreign portfolio investment is picking up. So I don't see I don't think there will be any difficulty in raising extra money from the international markets. Now, with regards to what rates will we get, I don't think it'll be any worse off than what we got when it was the $3 billion. And this, again, is considering you know, the price in oil. Yes, the elections might constitute, you know, some sort of level of risk, but the last one being 400% oversubscribed. And if you think about it, the economy is in a better place today than where it was when we raised the $3 billion, which was oversubscribed. And the movement in oil price, I can't see there to be a problem. I mean, I did read an article, funny enough, I think it was in today's papers, where our borrowing has tripled, you know, from 12 trillion to roughly about 22 trillion. And we haven't seen a considerable move, you know, in the economy itself. But again, I don't think that would scare off foreign investors. It seems as if we're gradually
going, you know, past that discussion of where do we get the money from? Can we get the cash? You know, we're now moving on to what's the money being used for? How well can we pay back? You know, and what our budgets really do say. Pretty interesting.
Well, that's a good point, because I suppose that's what. If we really think about it, yes, we're borrowing a lot, but as a percentage of our GDP is relatively small. The worry is what we're using the capital for. Is it consumption or is it infrastructure? I mean,
because, you know, taking a look at the breakdown of the budget, I mean, you're looking at a budget that heavy, and you're thinking to yourself, well, capital expenditure is really going to get more this year. On the contrary,
no,
it almost happens to be the lowest among the top three.
It's consumption. So. We're hoping that maybe you know, I suppose there's quite a bit of backlog that needs to be cleared. I mean, our hands and our lives are in the hands of the people that you know, spend the money that we raise.
You're the expert here. I mean, that's not very good when you talk about wanting to push development going forward, is it?
Well, you know, if we're being very honest, it's really out of our hands, isn't it? It is, you know, that's the honest truth.
It is. Talk us through what's playing out really in the international markets at the moment. Just reading up an article this morning, the trade war between U.S. and China, and the impact that, of course, is going to have on exchange-traded funds, you know, investments, and of course, exporting countries as well. What's really happening
now? We're not sure if both countries are posturing, or if this is going to actually, you know, go into something very serious. Yes, Trump slapped on the extra tariffs. He has threatened to increase. China has threatened to retaliate. I mean, Trump has also alienated his European partners. So there's a lot of political uncertainty. Whether it escalates to something that will be detrimental for the global economies, we're waiting to see. I mean, we've got to bear in mind that trade wars are not good for either parties. The IMF and Lagarde has stated that it would considerably affect global growth. So we're hoping that is posturing, but the longer it goes on, the more uncertain things would be. I mean, a number of people tend to think that you know, Trump is saying a number of these things because they have their midterm elections coming up, and that might be, you know, something he's trying to motivate his base or make it very clear that he's doing what he wants to do. As we saw with the immigration policy, he can backtrack.
You know, I was just going to say that, you know, I do not think Trump is someone who you just take his words lightly anymore.
Exactly. So, but we saw with the immigration policy, he did change his mind. So, I mean, if they're advising him and it becomes very, very clear that nobody's going to give in, I'm sure it's a way of getting a better deal. That's what I would have thought, because I don't think you would want to, you know, cut your nose to spite your face in this case. But it's very uncertain at the moment. global economy is very uncertain. We've seen a pullback in all European markets, including the American markets. You know, we've seen them fall. Last week, for example, we saw a fall in the US. It's opened up today down probably about almost 0.5, 0.6%. Again, it's all on what we're expecting from the trade wars. I mean, most investors would rather sit on the sideline and see how things pan out.
Now, away from the wars, let's talk a bit about where there's peace, actually. Of course, we saw that successful meeting between the US and President Kim Jong-un as well. Talk us through the impact that's already happening, you know, having on the international market today as we speak. And what do you think investors should look out for within this space going forward? Well,
if we, you know, I was speaking to an investor on this issue on Friday, and you know, it's the geopolitical tension. Whether it has a considerable impact on global economy, I very much doubt it. I mean, I mean, North Korea does not really contribute that much towards the growth of the global economy. The threat was the uncertainty that you know, the nuclear arguments would have, and what issues would it have with China. I mean, it's a fantastic relief that they did meet. Whether there was anything concrete put into place is another issue. I'm sure this is something that will take a while. It's just good for the sentiment. It's good for the general sentiment of the global economy that, you know, there's not going to be the threat of nuclear disaster. But with regards to numbers per se.
But North Korea is also in need of investments, though. I mean, if that scales through, that's an open door.
For North Korea, of course, it's fantastic for North Korea, but not
and for countries to do business in North Korea as well.
But not a considerable difference to the global economy. So it'll be very good for North Korea, but in the interim, not a significant change for the global economy.